You take trades, can you like add in like the comments, like if it's like a counter trend trade or like a continuation trade? Like mentally, it just helps me.
Okay.
It's like if you just type it in the chat. Take trades, can you like add in like?
Hold on, say something again. I want to make sure I can still hear you.
Yeah, because I heard it like echoed.
Okay, yeah, because I just went live, so I had to mute that.
Okay.
But yeah, no problem. Normally, that's why normally when I do, like, I don't know if you watch the week before it's cast. Normally when I do those, I'm already given the idea of what I'm looking for from the higher time frame to the top down, so I pretty much cover that. So that way, when I give the signal, you understand that it's doing what I said I was anticipating or looking for on the weekly forecast. You know what I mean? So that's why normally going into the week, I'm like, okay, boom, boom, boom. Even if you go back to when I covered the yen pairs, even though the yen pairs was overall in the uptrend, we was able to catch some big moves on those. You know what I'm saying? So that's why I covered. This is what I'm looking for. I anticipate these pullbacks, or when I was looking at the dollar, how everything just went in line. So that's really why I do those, because that's me already. Like, that's how I prepare for my trades. Going into the week, I know what I'm looking for that week. Because usually I try to catch, like the cycles of the market. Normally, if the dollar is, for example, if we look at the dollar index as we prepare for this FOMC release, so if we look at the dollar index, and before this move, so when I saw this move, now I was also calling out these moves. You can go back, you can see I was like, I believe the dollar is setting up for another down move, and that's what we got. So for that week, for that specific week, I was bearish going into the week. I was bearish on the dollar. So if you look at all the dollar setups I gave out, it was going in line with bearish dollar. You see what I'm saying? The same thing here. When dollar broke this level, I was like, okay, it broke a significant level. But of course, if I zoom out, we are coming into a level of structure where if they do raise rates, I'm not surprised that dollar pumps from here. You know what I mean? So that's a possibility. But last week, I was bullish that week on the dollar. So that way I was able to catch moves based off of this dollar correction. You see what I'm saying? So how I trade, how I look at it is week to week. Like, yeah, you could look at the monthly, but like technically we in an uptrend or we in this. But I do it week to week because from experience, I've noticed that the market moves in daily cycles. You know what I mean? So, and based off of the daily, that's why within the week, the daily plays a big role in what I'm looking for next. The daily, the 4 hour within that specific week. Now, of course, I factor in the weekly heavy too. Depending on how the weekly close, then going down to the daily, that's when I would look how I look, to take the next moves, if that makes sense.
Yeah, that makes perfect sense.
All right, so y'all, I'm testing this out. If y'all on YouTube, if anybody on YouTube right now, I don't know. I'm testing this out on Zoom. I mean, I ain't never did this on Zoom. I'm actually about to pull it up to see. We're preparing for the FOMC release. And so really it's like mixed. For me, it's like mixed signals, you know what I mean? Because if we look at the dollar overall, we can see here, ever since this top, we pretty much had a fall, found support, pulled up, dropped, and we basically been ranging right here to price finally broke out of that. So even if we look at the monthly, if we judge it based off of this area structure, price started moving in the uptrend from that, and we zoom out and we see overall, where price is at. So this is an area, all right, that price could potentially pump from. All right, so I'm keeping that in mind. But with the inflation and with the rates, they've been paused, like they paused interest, the rate hikes, and that played a part in these moves. Dollar continuing to dump, negative CPI, and that just brought the volume into the market. So now going into this release, if we look at, let me see. So right here, Yeah, so they're forecasting them to raise the rates 0.25 basis points. So if that happens, it's likely we're gonna see some bullish value coming to the dollar. Tomorrow, Thursday, we also got the rates coming out for the euro. So this is obviously a news heavy week, so it's a lot of volume that I expect that's about to come in. Normally with FOMC, they set up for big moves, but I always, more often than not, anticipate some type of manipulation, you know what I mean? Especially going into an event like this. So technically the level that we're at right now, if I measure this, like if I measure it from like this weekly candle all the way down to the breakdown, it's pulled back, it's rejecting from 61.8. So if they do keep rates the same, then it is a chance that we'll see the dollar just roll over. You know what I mean? It's a good chance if they stable the rates, don't pump it yet, but depends on what they say in the conference too, because Powell could come out, let's say if they keep rates the same, he could come out and hint towards the raise of rates in September. So if that happens, so it really just depends what they choose to do right here. But we definitely about to see some institutional manipulation. So that's why normally with FOMC, I like to wait for them to show their hand and then play a line with it. So if they firmly hold on a breakdown, then I'll look to trade in that direction when it comes to the dollar pairs with the weakness. Now, if they just continue to pump, then chances are we're going to see we're going to see everything align with it. And it's interesting because when I look at the yen as well, the yen is going to be directly impacted right now, I believe, too. Not only also the yen, JPY, the BOJ outlook report, the policy. So we have rates coming out for the yen as well. All right. They're forecasting those rates to stay the same. All right, which could indicate, overall, if we're looking at the Japanese yen index, we're in a downtrend on a daily. All right. So really, like the last few weeks or that week when we caught those nice moves on yen, like how you said, Tim, like, is it a counter move? This was definitely a counter move. Like when we were selling UJ, selling GJ, all of those moves was definitely counter. But I saw this on the weekly. Boom, we got a bullish engulfing at this lower low, setting up for a potential nice corrective move up. So that way, we're still able to catch those moves on yen pairs aligned with that. But now price pulled up towards a level of structure and started falling. So right here on the weekly, price did just print this bearish engulfing. All right, so I'm interested to see, them keeping the rates the same, that could just help yen fall, so I am watching this level. This is a level that I would like to see it hold and start to fall down, back down towards this low and possibly to make another low. All right, but if it continues to just pump above here, then they're probably going for a deeper pullback. All right, so really, we just got to see what the numbers come out in about 9 minutes. So if we look at some of these pairs right now, see, I'm torn right now because like right now, it can go either way. Like for example, if we look at GU, if it wasn't FOMC, like this type of setup on GU, for example, we see here on a daily, we're in the uptrend, right? Higher highs and higher lows. Clean structure plays. Price broke above here, retest, bullish engulfing, continued up. This was a pullback from that. Now we're retesting the previous level of structure similar to here, right? And we formed a bullish engulfing. So with this type of price action, I would expect price, more often than not, I would expect price to just continue up. You know what I mean? But with FOMC, if they raise rates or if they bring in the volume into the dollar, then GU might struggle here and it might pull down further. But if it does the opposite, if they just manipulate and then they dump the dollar, we could possibly see GU do something along the lines of this. Because from a technical perspective, I like buys on this, but I understand with FOMC, I expect some type of manipulation, but we could get something like that too, possibly. So yeah, we just got to see. Really, it's best to sit on your hands with FOMC. Allow them to show their hand. Normally it's clear after the release, after the conference, price action develops clear, and then going into. And that's likely going to be a sign. I believe whatever happens to the dollar right now is going to be a sign where it continues into next week, most likely. Y'all let me know if y'all have any questions. So, and that's why I'm torn, because now if I look at that on GU, but now pairs like AU, technically, I liked sales on this week, but you know, price broke down, it came up, it grabbed liquidity above this prior high, right? And then it started falling down again. So if the dollar comes out and you know, if the dollar comes out and continues to pump, then you know, we're gonna see this break down, you know, something like this. So if that happens, let's say the dollar confirmed that it's bullish, right? And then let's say if that breakdown happened, wait for the initial move, then ideally I would like to look for some type of pullback or retest in that scenario and take that down further. Right. So this is when FOMO kicks in. You know what I mean? Dealing with FOMC, like, you know, you don't want to miss certain moves technically, but you know, it's best to just be patient on this type of move. Even when NU, like I decided to pull out of this only because I didn't want to be swinging and holding a pair through the news, because I anticipate some type of manipulation. But still looking at this, it's still from a technical perspective, I still like this. You know, we had strong break down the structure here. We got the retest and it's starting to hold. So on any other day, if it wasn't FOMC, this is clear as day to me. But we don't know. They can clearly manipulate, decide to dump the dollar, and then decide to just go the opposite way. All right, so that's why we gotta wait. But if not, dollar holds strong, then expecting this to move down further. All right, and this is not, FOMC comes out not far after, like shortly after that, you know, about 3 hours after that, we'll see the daily candle close. So if they decide, okay, you know what, we about to pump the dollar, then like in this scenario with NU, could possibly still get another opportunity later, because if they hold dollar strong, then this daily candle will likely close bearish engulfing, right? And then after that, you know, you could look for some type of possible pullback and then still look to catch that wave. All right, so that's why right now I'm just gonna be patient and we're gonna react after the news. We got 5 minutes. Let me 4 minutes. Same thing with gold, but see with gold already pumped. So gold came down and this was a beautiful play last week, you know, when caught some of this sell. So we see right here, gold basically broke down right here, right? So this is like the type of setups I look for. So initially, I saw that price grab liquidity above this high, broke down right here, right? And after that, on this pullback, I caught it, all right, on the breakdown. But then you see we broke structure, retest, boom. So now price found some support. So it's back at the same level, all right? So this is going to react to FOMC. So it could go either way. From and any given day, like this type of price action, I like this for sales. All right. So if they do raise rates like they're expected, then we could see this just fall. You know what I mean? So if you are in any trades during FOMC, just make sure you trade, make sure you lower risk, because anticipate manipulation. What else we got? EU. So with EU, it's interesting because EU also had a big fall. I caught this signal out last week. And this goes back to what you said, Tim, to where anticipate, like, you know, let y'all know if it's a counter trend trade and everything like that. So we can see here on the weekly, we've been in the uptrend, right? Higher highs, higher lows, right? We created this higher high in price. So understanding that was a higher high created in price right there. This week, this sell for me was a corrective sell. All right. That was a corrective sell because I was looking for price. if y'all go back and y'all go watch the forecast, you see I was looking for price to come back here, right? And we reached that. But now, this all depends on what FOMC do. If the dollar, pumps, then we're going to see something like this. The dollar pumps. I expect this to pull down and create another low, right? And then you can look for pullback opportunities, or you can look for the retest and look to continue. All right. Could look for price to do one of these and then have an even bigger fall. All right. So it's best to, now if it does the opposite, it's going to do this. Pull up. All right, then continue. All right, but we don't want to get enticed, because you could look at this like, oh, they're starting to move down, and it could be a fake out. So we could see, yeah, we're gonna see, but what we got? 1 minute. Y'all forgive me if y'all hear my daughter crying. The fatherhood of a trader. Here we go. Yen is we about to see yen do something too, though. Yeah, it's about to get real spice. I want to see this. I want to see these numbers, man. I'll be over here refreshing. Where we at? Oh, they raised rates. But look, you see what they're doing. So they did raise rates. All right. But this is the game. They raised rates 0.25 as expected. But don't be surprised if they still go the opposite way. All right. Let's see what the dollar doing. All right. It's a little quiet right now. And I believe it's going to be quiet. It's going to be quiet, and then it's going to pick up during the conference. You see the dollar not doing much right here. EU is looking like it's trying to go. But is this a fake out? So if this is not a fake out and they decide to dump the dollar, then because this previous daily close, like I like this type of close for like an indecision, possibly to reverse. But if they hold and dollar dump or pump, my bad, dump, I would expect some type of daily close above this level. All right, but let's see what gold is doing. You see, we got a lot of back and forth right now. All right. Let's see. Yeah, so right now it's looking like they still stalling, but see, GU is still continuing up. That's the move I wanted in GU, but it didn't pull back to where I wanted. So yeah, EU, we're gonna see. See, this could be like smoke and mirrors, like, oh, they raise rates, and they still decide to dump the dollar. Press conference is not until like 30 minutes after the release. So that's when you really, exactly, I agree. The daily close, I agree, will be the strong determining factor, So it could be good to like wait till all the noise clear, you know what I mean? Same thing with the dollar. If this decides that it's going to dump and we get a strong close, you know, that could be an indication to now look to trade in that direction. We see GU is still pumping. And like I said, a lot of times they show their hand beforehand, like GU, this bullish engulfing on the daily. More often than not, you will not see price break that and you can just drop. More often than not, you won't see that. So could this be a sign that that the dollar bears were coming? I look at stuff like that. Now EU is around this level. Gold is spiking, so yeah. And if we look at yen, yen is indecisive. Let me look at some of these indices. Normally, you know, you'll see the indices trade inverse of the dollar. So right now, they're not even doing much just yet. Yeah, I expect things to pick up in about 30 minutes. Or like when Powell get to speaking, I expect things to really turn up. This is like the calm before the storm for real. Some of these yen pairs, like from a technical perspective, I would like EJ from here, you know, with this type of price action. I would like that potential. But again, I would like to see how these daily candles close. And this is, in a way, on EU, this looks like an inverse head and shoulders right here. It's like an inverse head and shoulders. So if we get this, I would like to see the pullback, right? If dollar want to hold bearish right here, we'll see EU pump up. We could possibly catch a little pullback and look to catch the next wave. Because if that's the case, I would like to see that daily candle close bullish. CJ, yeah, let me take a look. Yeah, y'all let me know any pair requests. All right, so CJ broke this level. Somebody, I think it was Jen that asked, I said it was a break or bounce type scenario. We had yen strength come in to start this week, so that's some of the value we saw coming to some of these yen pairs. So now in this type of scenario where you can see here price, you can see this is a level of demand that actually price just broke. All right, so normally seeing that indication, I would look for price to continue down further. Technically, this was like a double top. All right, so a retest of this would be nice, like the neckline area. That could be nice. If we look at the daily is looking like it's going to close firm below that level of structure. So in this type of scenario, I will only be looking for potential sales. All right, but still, I would keep in mind that we got JPY rates tomorrow, I believe. All right, but normally the dollar and yen trades opposite of each other. So let's say the dollar holds bearish, then we could possibly see the yen continue. But in this scenario, something like this, I would like to see a pullback. Look to take that down. That's how I would look at is either pull back further, or if price continues to just break down here. Right? If we get this, continues this breakdown, pulls down, break structure, possibly continue, maybe catch the next opportunity. All right, you could have either had counter trend line here as well. You see that we broke that. Let me see. What we doing? What we looking like? We still the calm before the storm. Let me look at this oil. Is oil making any waves? Oil is also something that tends to trade opposite of the dollar. So I look at certain correlations. You know, we got oil. We had a big move up. All right. It slightly broke above this level. Not really. I don't really trade the indices for real. I know a lot of people like to trade it because of the volume, because of the volatility. I don't really trade it much. I stick to what I'm best at, which is Forex. But if we look at these, well, really, because me personally, like I can map it out and I can still give a bias on it that still could play out. But for the most part, you know, honestly, I don't know how to count pips on NAS. So it's like, I'm not going to trade none. I don't know how to count pips fully. You know what I mean? But if we look at this, I think this is like almost 400 pips right here, I think. Yeah, so it goes by points. So I believe it's like that. Like, so from 15,400 to 15, I'll correct me if I'm wrong, to 15,800, that's 400 pips. Or is that 4,000 pips? Y'all let me know. But so when I look at like when I'm looking at the indices, I understand that it's certain correlations that I look at. Of course, I look at the dollar. Like you can see, we're pushing back towards this high right here. All right. So this is also awaiting what the dollar's about to do, or what they about to do with these. Well, they did just raise rates. Typically, you'll see dollar bulls come in with the raise of rates. So I'm really curious. Like, they might be enticing people right here. This might be a setup. They might be enticing people, you know what I mean? And then just gonna pump. But typically, you will see a pump with the raise of rates. All right. Now, if they pump, you'll see the dollar pumps. Normally, you'll see the indices do the opposite. Like, you'll see NAS, US 30, S&P 500, all of that sell off. Going in line also with the Australian dollar. The Australian dollar correlates with indices as well. So that's why it does make sense, because this is pulling up into this level of supply. So I wouldn't be surprised if this is setting up for the fall to go align with if they decide to pump the dollar with the raise of rates. That's good. That's really good. Yeah. Yeah, I be seeing people kill it with Nas. Like, if I know I can trade it, I just don't really trade it like that. I just, like I said, because I wasn't even sure on the pips, but I think I just calculated that right. I believe, like, let's say from here, let's say like 15, around 15,900 to like, what, 15,000 even. I believe that's like 900 pips, if I'm saying that right. Yeah, I believe that's like 900 pips. So it's good to just find something that works for you, whether it's just trading a certain market, trading a certain pair. You know what I mean? Price action is price action, though. When you understand price action, you understand technicals, you could really trade any market. You can see this has clearly been just moving in the uptrend right here, up towards this level of supply. So you could have really just been on all these little pullbacks. You see what price does a lot on these corrections. It creates these flags, right? Like corrective bullish flag, extension out, right? You get these little corrective plays where you just continue to ride price up, right? Right here. Corrective flags to continue to ride price up. Right. So now the question is this about to do the same thing here? Is this going to give another wave up, or until supply and then maybe go? Or if this just going to say, you know what, we about to just break down, give a sharp move, and then you could look to trade the opposite direction. Yeah, this structure here does look clean. Normally, when I look at normally I'll trade, like when I trade, if I decide to trade indices, sometimes I mess with S&P or like the US 5. I mess with this sometimes, but all the indices is going to trade the same direction for the most part. They trade in the same direction. So it's really just take your pick. If you trade in more than one indice at the same time, you're increasing your risks because they're likely going to go the same direction. All right, so we pushing into levels of supply here. All right, this is a level that price can get ready to fall from. All right, this is one of those levels. So in this type of scenario, I'll probably come down here. I'll look at this. Okay, price been moving in a corrective uptrend. Be moving in an uptrend here, right? Same thing. Same thing here. You see we making higher highs. And you got these corrective moves. You got these corrective moves on the pullback. So in this scenario, price broke this high, created a higher high, pulled down, created a higher high here, right? On the pullback, you look for price to just continue. So now in this scenario, if price comes down and shift price action, dollar pump hold, and this decides to shift, then you could look to catch the wave to the downside. Yeah, because you can compare this with like the Australian dollar, like the AU chart, and you'll see that they correlate. 9 times out of 10, more often than not, AU is dumping. The indices are also setting up for the dump, and that goes in line with the dollar pump as well as Australian dollar correlating. So what we looking like? It's look like it's still quiet right now in the market. I'm actually a little surprised that it's this quiet, but then again, Powell ain't started speaking yet. So when Powell starts speaking, that's gonna turn things up. Maybe I should have hopped on right before the conference because that's when I expect things to really start to move. Is there an odd index? Yes, there is an odd index. You could look at the AXY. It's a bit choppy though. Let me see if I can pull up the yeah, the AXY would do it. End of the day, it pretty much looks just like if you pull up an AU chart, you pull up Australian dollar index chart, it's basically gonna look the same. You know, so where we at is just, I don't like how it's all these gaps within price on this chart, but where we at a similar level. Because if you look at this, you see how you at right here? You got this top, right? We got this top. I'm gonna go to AU, you're gonna see how it's basically the same. I got that top, you know, we broke down, pull back here, and now here we at. That's where we at right there. That's exactly what we looking like on AU. It just looked more clean here. We got the top, the same top there at this high, right? This is the breakdown, and this is currently where we at. So if we break down, then look for boom. Or if we do the opposite, and yes, sir. Yes, sir. So now looking at like some of these yen pairs, right? So it's interesting because we got the ECB coming to the ECB conference that's going to impact the euro. We got the yen rates. So from a technical perspective, all right, price pulling into this level of demand right here, this level of structure. You see on the 4-hour, we just printed this bullish engulfing. You know what I mean? We printed a bullish engulfing. So I would like to see a price want to hold here. All right. Also see how this daily candle is going to close. All right. Definitely right here, if price decides to continue to pump up, breaking above structure, you know, that's a nice indication. The market is made up of impulses and corrections. So if you get a strong impulse in the direction, that's likely the direction it's going to continue in. If it's a confirmed impulse, and then you look on a corrective play to continue to ride it up. All right, so I really want to see, because really this week I was looking, because you can see here on the weekly, right? Clear uptrend, right? So I was looking to continue to ride that. On the weekly, had a strong close, but I knew with all this news, things could shift and they can stall and, grab liquidity and everything. We saw right here, really after a candle like this on a daily, I was liking for price to continue up after that. But you can see they came all the way down, cleared all these orders, grabbed liquidity. All right, so if this daily candle and this 4-hour structure decides to hold right here, this can be the shift that we possibly see. All right, to continue up. GJ, same thing. GJ came down. I'm not gonna lie, I was sick on Friday because, okay, it was a good trading week. And I was like, you know what? Like, I closed this. I took a few pips and I just decided to close it only because it was going into Friday. I wasn't expecting this to pump like this, though. So I saw this price action right here. So, but right here, it's a lot of liquidity, right? They like to, you see all these wicks. They like to, press liquidity at these levels. When I saw this bullish engulfing right here, and then price pulled back and then had a nice close right here, I was taking buys, right? You enter your buy, stop loss below structure, right? And you could take profit to top of structure. That was a nice setup. So I took some profit, then I closed, but then you see, boom, price just pumped crazy. But I was anticipating that because the daily, if we look at the daily, all right, price found firm support, pumped up. This is basically was a double top that was forming. So it was retesting structure again. And then we got that big pump. So now moving forward, I would still anticipate for this to set up for another wave with this type of price action. This bullish engulfing candle on the daily just basically engulfed that whole trading week. So that's typically a good sign that the buyers are in control and it's likely going to continue up. All right. So initially, to start the week, it did give a pull down right here. All right, we had a pullback. And this was another scenario. I actually caught this buy right here. All right. I was entering buy right there. I caught some pips on that because, like, if you measure this move from that swing low to this swing high, price pulled back perfectly 61.8. So we pulled back. We got a nice bullish rejection, right? I actually had a buy limit over here. Entered, caught some pips up. You see, we pumped from there. All right. But now we're chopping. And that was an easy indication because, like I said, the daily, with that daily engulfing on that pullback, you expect price to continue. And that's what happened. All right. But now price is choppy, is playing around this level because, we got all these fundamentals, all these news events. So it's a lot of liquidity grabs and manipulation going on right now. So right now, price is ranging right here, right? I wouldn't be surprised if it decided to have another fall before rising, but price did pull down. We got this type of price action on a 4-hour. All right, so it could possibly set up here. This could be a double bottom on this retest because this was the initial play right here that I caught. All right, so this could have been just a retest of that low, and we could see this just hold double bottom right here. We could see that just hold and go up too. That's a possibility because basically, again, it retested at 61.8. This could be a double bottom around there, setting up for the extended wave up. If so, I will expect this to come up towards these levels, just, push up towards supply. All right. And what would give me even further confidence for price to do that? We need to see yen hold right here. If yen could really just hold right here, start to get firm breakdown, right? Then I give me more confidence to buy EJ, buy GJ, and just trade in line with that, with yen weakness. All right. But right now we are at the area of structure, this area of structure right here, right? We had a daily breakdown, right? This is the retest. Price grabbing liquidity. We could possibly see this roll over from here. If not, it continues up, then expect a deeper pullback. All right, so we still stalling. We stalling. The conference is in like 8 minutes. Yeah, now you understand when they got all them screens, huh? And it's crazy. I really don't have a lot of screens, but I think I am gonna get a setup, at least a few monitors. You know what I mean? Especially with like events like this. Uh, but yeah, I can understand why some traders do that. Does anybody have any other questions? UJ was another play. UJ is the perfect pair to be like a direct indication of the dollar and the yen as a whole, because typically the dollar and the yen is inverse of each other. So we get yen dump, dollar pump, then that's perfect. That's perfect for this retest continuation up. And y'all remember we caught this buy. I called out this buy last week. So we was able to catch this and move higher. So this could be the pullback. Coming into this week, I was looking for price to pull back towards here and then pump. But this is the same scenario right here on this pullback. We're retesting around here. We got the bullish engulfing right here. All right. So if yen holds right there and just starts dumping, then this is the ideal area, right, to expect that to continue up. See what we got real quick. Yeah, they should pump though. They should pump the dollar. Like I said, like they just raised rates. They should pump. But I don't know what Powell about to be talking about. Probably trying to ease inflation, all the typical stuff. It depends if they say, hey, we have, like, let's say if they say, hey, they raise this time, but they're looking at pausing. They're looking at pausing, in the coming ones, in the coming decisions. Or if they're looking at raising, they might say, we looking at to do a couple more raises in the rates. If that's the case, then, this could be setting up for a swing on the dollar. This could be setting up for that big move, right? It could be setting up for that big move. If they decide to have a couple more rate hikes. You said, so on my screen, there's a small gap in the 4-hour. I've heard when we see gaps that usually the market tries to close them. Yeah, gap trading, I remember I used to trade like that. Oh, there's a gap. Like on Sundays, the market gap. Let me try to catch this and scalp this and try to close this gap. So yeah, usually you will see gaps fill. You just got to be careful with that though. But yeah, if you see gaps in price, but that don't mean it had to fill right then and there. So you got to be careful with that. All right. So the gold is normally what shows us a lot of times what the dollar is about to do too. But even here, it's still interesting because, well, then again, gold did continue to pump because I'm like, after forming this bullish engulfing, I wouldn't have definitely sold into that. But after the bullish engulfing on the daily, you see it just continued to pump. So it gave that extra pump to go in line with the bullish engulfing on the daily. And it came to this level of structure that it fell from. And now we see we getting that rejection. Yeah, I believe they're set to hold. Give me 1 second. All right. Gold retrace at 61.82. If it holds there, let's see. Are you doing it based off of the daily fib? Let's say like, gotcha. You're right. 61.8. That's beautiful. Good catch. That's beautiful right there. So yeah, that could be added confluence. And this type of bearish rejection on the 4-hour, I do like that too. And if this is the dollar hold, then this can go much further. This can possibly break these lows. What we looking like? Hey. All right, so these pairs are starting to hold. So I like this. Like, it's crazy. Like, it's looking like it's about to just do exactly what I anticipated to start the week. You know what I mean? At least definitely on NU. All right, this was a textbook break and retest of structure. Right. So these daily closes are key. And honestly, the beautiful thing about FOMC is once the numbers are in, once it's clear of the direction, then it's really like, it could be easy money, honestly. Like once the noise is cleared and it is clear on the direction that they're going in with the dollar, now you just catch those waves. Because if this hold, like for example, in NU, you know, bearish engulfing, you know, you could look to catch this wave down towards here. Same thing looking at NU. But again, it's still not 100% confirmed. Like these could still be enticing moves, you know what I mean? So the conference is about to be active now. So we about to see GU possibly can dump from here if they want to hold the dollar. On EU, I definitely will be looking for this. Price hold. We can get a nice breakdown, you know. If the dollar want to hold here. It should though, like it should. You can go back, usually they raise rates, they pump the dollar. All right. But it could be rumors around, oh, they're about to, after this, they're going to pause rates and stuff like that. Those rumors could facilitate, you know, some easing in the dollar to dump, you know, so it's just to keep all those things in scenario. But for the most part, price action is about to show its hand. We about to see right now if they really gonna want to hold the conference. Let me see if I can pull this up. Oh, go back.
Reduce our securities holdings at a brisk pace. We've covered a lot of ground, and the full effects of our tightening have yet to be felt. Looking ahead, we will continue to take a data-dependent approach in determining the extent of additional policy firming that may be appropriate. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has been expanding at a moderate pace. Growth in consumer spending appears to have slowed from earlier in the year. Although activity in the housing sector has picked up somewhat, it remains well below levels of a year ago, largely reflecting higher mortgage rates. And higher interest rates and slower output growth also appear to be weighing on business fixed investment. The labor market remains very tight. Over the past 3 months, job gains averaged 244,000 jobs per month, a pace below that seen earlier in the year, but still a strong pace. The unemployment rate remains low at 3.6%. There are some continuing signs that supply and demand in the labor market are coming into better balance. The labor force participation rate has moved up since last year, particularly for individuals aged 25 to 54 years. Nominal wage growth has shown some signs of easing, and job vacancies have declined so far this year.
Saying all the good things.
While the
right?
jobs to workers gap has narrowed, labor demand still substantially exceeds the supply of available workers. Inflation remains well above our longer run goal of 2%. Over the 12 months ending in May, total PCE prices rose 3.8%. Excluding the volatile food and energy categories, core PCE prices rose 4.6%. In June, the 12-month change in the Consumer Price Index, or CPI, came in at 3.0%, and the change in the core CPI was 4.8%. Inflation has moderated somewhat since the middle of last year. Nonetheless, the process of getting inflation back down to 2% has a long way to go. Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher cost of essentials like food, housing, and transportation. We're highly attentive to the risks that high inflation poses to both sides of our mandate, and we're strongly committed to returning to inflation to our 2% objective. At today's meeting, the committee raised the target range for the federal funds rate by 0.25 percentage point, bringing the target range to 5.25% to 5.5%. We're also continuing the process of significantly reducing our securities holdings. With today's action, we've raised our policy rate by 5.25 percentage points since early last year. We have been seeing the effects of our policy tightening on demand in the most interest rate sensitive sectors of the economy, particularly housing and investment. It will take time, however, for the full effects of our ongoing monetary restraint to be realized, especially on inflation. In addition, the economy is facing headwinds from tighter credit conditions for households and businesses, which are likely to weigh on economic activity, hiring, and inflation. In determining the extent of additional policy firming that may be appropriate to return inflation to 2% over time, the committee will take into account the cumulative tightening of monetary policy, the lags with which monetary policy affects economic activity and inflation, and economic and financial developments. We will continue to make our decisions meeting by meeting based on the totality of the incoming data and their implications for the outlook for economic activity.
Daily close
and
is going to
as
be,
well as the balance of risks.
it's going to be key. How they close this daily is going to be key. So they saying all the typical stuff, you know what I mean? Boring stuff. But you can see how prices now reacting to this, right? If the dollar holds here and gives us a firm close back below structure, then expect that to continue. And from a weekly perspective, I wouldn't be surprised, because once we broke this level, I knew it was a good chance that we can just come back into this for the retest and give us another wave down. So that possibly could be what we're getting right now. It's possible. All right. Possibly another wave down into these levels before possibly then pumping. Yeah, so I really just want to see how these daily candles close. And that's gonna be the direction that I'm looking to trade the market in, especially the daily candles, how the dollar hold at this level. And that's the direction that I'm going in for the rest of the week. And likely whatever direction I'm going in with the dollar right now, depending on how things settle down, that's likely the direction I'm going in into next week. Right. So whatever direction they go, it could be swings into next week, possibly. That's one thing I've noticed about FOMC is they typically do set up for some nice swings. All right, it's still not like a ton of movement. You know, it's like they kind of, you know, going back and forth on price. But it all depends on how the dollar hold here. I believe if we break down here, then we going. Anybody got any other questions or any other pairs? Definitely let me know what yen looking like. See, now it's looking like yen trying to do something. Yen hold right here. If yen hold below this level, same thing. I'll be looking to trade in that direction when it comes to yen pairs with the yen weakness. Y'all trying to do, man. Y'all trying to dump. Y'all trying. All right, it looked like they about to dump the dollar right now. What they trying to do? They about to dump. They about to dump this thing. They about to dump this joint. They about to dump this joint. Watch. Yeah, that's what it's looking like now. And that will go. It's looking like they about to come. This 4-hour candle is getting real strong on the dollar. Gold, yeah, it's a wrap. They out of there. I actually bought EU. I bought EU. I got my stop below here. I'm gonna take price. This could be a fake out, but I don't think so. It could be a fake out. I didn't risk a lot, but I did buy EU. You see how dollar is moving. Dollar is getting ready. This 4-hour candle closed like this. Like I like for it to continue. And the way gold just pumped, yeah. Now you see EU pumping. So again, daily close. If this firm bullish engulfing, like look like a morning star potential setup. All right. You know, maybe give another retest after that daily candle, depending on how crazy they trying to go right now with this close. And then pump. I don't know what he talking about now.
So we'll be watching that carefully and seeing how it evolves over time.
Neil. Thanks, Chair Powell. Neil Irwin from Axios. So as you referenced earlier in the intermeeting period,
GU was the one, man. Like I really wanted that pullback.
Still strong, but moderating. Jolts look good. So if you're data dependent, why not pause again? Why not stay on hold? Why not take another meeting off when the data was at least cutting in the direction you want to see?
So if you go back to what we're trying to do here, we're trying to achieve a stance of policy that's sufficiently restrictive to bring inflation down to 2%. At the last meeting, we wrote down our individual estimates of what that would take, and the median of that was an additional 2 rate hikes. So I would say we looked at the intermeeting data, and as I mentioned, broadly consistent. Not perfectly consistent, but broadly consistent with expectations. And as a result, we went ahead and took another step.
Your line chart.
And that's, a labor market that continues to be strong, but gradually slowing. I mentioned that the inflation report was actually a little better than expected.
So this is what we got.
We're going to be careful about taking too much signal from a single
that's it right there.
And growth came in stronger than expected. So that's how we look at it. And so we did take that step today.
That's crazy, man. I told
Nick Timmeros of the Wall Street Journal.
I told my boy, man, he was trying to
Widely believed the median.
he was trying to get me to sell gold, and I was like, I don't know, man.
From June for the fourth quarter of this year will be
I
too
don't know,
high,
man.
given autos and shelter. And that by September, that may warrant a downward revision in the inflation
think this
forecast of
just
20
may
to 30
be it.
basis points.
And again,
Would that type of inflation
Let me turn this
progress
down.
be enough?
and again, this is also for the 61.8. If we measuring this weekly candle, right? The weekly candle breakdown. Prices rejecting from the 61.8. All right, counter trend right here, counter trend line, right? Prices breaking down. This 4-hour candle looks like it's about to close bearish engulfing. So what we can do also, we could throw our moving averages on there. You can see we got the crossover. This is the 4-hour. The red look like it's getting ready to cross over here. But if we go to the 2-hour, most likely it crossed over there. All right. So yeah, this is looking like we could be setting up for the dollar to just dump. All right. And with that, we see gold pumping, going crazy. And this is why I say, like, look, it's certain things that you pay attention to that kind of, it's like they leave footprints in a way. Because, like, for example, GU or even gold, seeing that bullish engulfing on a daily didn't sit well for me to that gold was going to dump. I'm like, nah, that can be a sign. The same thing with GU. Like, more often, it's not normal for you to see price hold like this on a retest with a strong bullish engulfing like that on a daily, and for them to just say, forget that, and we out of there. That don't happen often. So to me, it was like maybe they showing a hand that dollar bears is about to come. And that's what it looks like we're getting now. All right. So now we're like EU. I hope that makes sense to y'all, but those are certain things that like I analyze, like, you know, I'm analytical. So stuff like that, I look at, I pay attention to. And here you see we getting that nice daily close, man, you know. So from there, moving forward, if you're not in any trades, you know, look for the pullbacks later. Look for the pullbacks later with this daily close. After this daily close, which is in like 2 hours, possibly slight retest will be ideal, you know. But let's see if these are firm daily closes or firm closes on a 4-hour and stuff like that. Because again, this could be fake outs. They could be faking me out. It could be fake, but that's what they do sometimes. But right now it's looking like we're good, you know. But what I'm gonna do is I'm gonna really pay attention to these daily closes. Even here, this initial daily candle right here broke above that level. You see, we came grab liquidity. This could possibly be setting up for that. All right. If we look at one thing I noticed, if you're looking like GA, you know, this normally has an interesting correlation, of course, with the Australian dollar, but that don't look good right now. It could possibly be setting up for something like that. But so now that the dollar is potentially giving us that dump, I'm interested to see what yen is going to do. Now, yen might just pump. Yen might pump. We'll see. Has anybody got any other questions? Again, if you in any of these trades right now, just take it easy. You know, let's see these firm closes because I didn't go crazy on this entry because I understand, you know, they could be faking. But right now, the way gold pumping, normally gold is the indication, you know. But even with gold, we are coming, even though it's pumping, it is coming into this level up here. You know what I mean? So I would say if you did take an entry, you know, use conservative risk. You know, I really want to be firm that this is the drop. Like, you know, it's still playing here, but I want to see even more of a breakdown, you know, but below this level. All right. So with that, I'm going to go on and wrap it up. Hope y'all got value out of that. I will update things after the daily close, and let's look at we can continue to just moving forward, ride these waves for the rest of the week and going into next week. This is going to give us the confirmation of where we're likely to head. All right. So I'll update you all after that, and I'll see y'all on the next one.